Adobe stock has dropped about 15% in the past 1 week. It's currently trading at about $465. Is this a good buying opportunity? That's what I'm going to cover in this video. I'm not going to cover the business model as I've covered that in my previous videos. I'm going to cover the financials and finally I'll do a valuation to show the upside. At $465 stock price, the market cap is about $200 billion. And for the past 12 months, they made about $21 billion of revenue. So that's about a price to sales of 10, which is not expensive. But look at the PE ratio, it's about 37.68. So that's again on the not so cheap, not so expensive territory. Adobe is already a large company, so let's look at how quickly it's growing its revenue. As you can see on the screen, for the past few quarters, the average revenue growth rate is at about 10%. That's barely double-digit growth. And it makes sense because this is already a large company. Let's look at its margin profile. We do know that Adobe makes most of its revenue through subscription, which is very profitable business, and that's shown on the screen. Their gross margins are close to 89%, which is phenomenal, and that resulted in profit margins north of 30%. It's very, very impressive. And look into the free cash flow margins, they're also on an average above 30%. So this is a very, very profitable company. In financial year of 2024, they made a total of $21.51 billion of revenue with 11% year-over-year growth. And for financial year of 2025, that's next year, they're saying they can make anywhere between 23.3 billion and 23.55 billion. That represents growth between 8.3% to 9.4%. And a lot of investors are used to Adobe growing in the low double digits, and all of a sudden they saw 8.3 to 9.4% growth. So the growth is actually decelerating. Initially, investors thought that AI is going to help Adobe increase their revenue because they're making a lot of investments in AI. Of course, there's also competition from the likes of Figma, Canva. People were thinking that since Adobe is a huge company, they're making a lot of investments in AI, they should at least maintain the current growth, if not for more. But the growth rate has suffered, as you can see, and that's why the stock has fallen. Let's now look at some shares outstanding. As you can see on the screen, the share count reduced from 460 million to 443 million in a span of about 2 years. So they are buying back shares, but not too significantly. Now let me move on to the valuation. Before I continue, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Adobe. I'll show two cases, one with reasonable assumptions and the other one with great execution. In the reasonable assumptions case, in 2024, they made about $21.5 billion of revenue. I'm estimating a growth rate of 8%. Because in the most recent year, they're saying they can grow anywhere between 8.3 to 9.4%. So we're looking at high single digits. And as they get bigger and bigger, the competition is only going to increase. And that's why I put 8% growth. With that, they can make close to $32 billion of revenue in 2029. From 21 billion now to 32 billion in 2029. The net profit, I'm assuming 30% because it's a very profitable company. And I'm assuming a multiple of 30, with which this company would be worth about $284 billion of revenue. The number of shares are about 444 million. In the next 5 years, they may purchase more shares back. Even if they buy, it's not going to be too significant because they're a very high market cap company. But I'm thinking that in the next few years, they have to put a lot of money in R&D investing, in AI investments, and therefore they may not be able to buy back stock. That's why I'm not considering the buybacks. With that, the stock price in 2029 would be worth about $641. Currently, they're at $464, right? So that's about 38% gain in 5 years, and that's not going to beat the index. Let's now move to the great execution case, wherein I'm estimating 10% growth rate. I'm counting that they're going to reaccelerate their revenue back into the low double digits. Of course, there's a lot of competition, right? So even if they can achieve 10%, it's going to be impressive. If they can do even better than this, then that is super. But in great execution case, if they can reaccelerate their revenue, that's good enough for me. I'm estimating a net profit margin of 35%. As they get bigger and bigger, I'm anticipating that they're going to become more efficient and be more profitable. And I'm estimating a premium multiple of 35, with which the stock price would be $956 in 2029. Currently they're at $464, so that represents 106% gain in 5 years. In conclusion, for my investment journey, I'm going to look at the reasonable assumptions case, wherein I'm looking at a 38% gain. and that's not going to beat the index. So I'll not be a buyer of Adobe stock at $464. But for me to get 100%, if it gets to the $320, $350 range, I can look at 100% gain. And that's where I would be interested in. So $350 or less, I would be interested. If not, I'll stay on the sidelines. Let me know your thoughts in the comments. Thanks so much for watching.